The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, Custodia Bank has gone live 1 week ago. The crypto-friendly bank announced that it launched its business to customers. Joining us now is Caitlin Long, Custodia Bank founder and CEO. Welcome to the show, Caitlin.
Hey, great to be on again. Good morning, good afternoon, good evening, wherever you are.
Good morning. Good morning. All right. Before we get into the news, I got to get your reaction to the markets this morning. It's all anyone is talking about.
Yeah, Lawrence, I thought your explanation was great. Really great. I was nodding my head. I don't know if your producers could see that off screen and laughing at the jokes you made too. I think that's right. We tend to be so America focused if we're onshore in the United States because there is a daily news flow coming out of Washington, D.C. and whether Gary Gensler flossed his teeth this morning does make news in the crypto sphere, but that's not what really is driving it. There's definitely it's a global market, truly a global market. There's a lot more adoption offshore than there is onshore. And most of the US volume at this point, really in the last couple of years, has tended to be not adoption for payments, but for speculation. Now, we need those speculators for liquidity purposes, but in other parts of the world where folks are using Bitcoin for payments, they're not here to speculate. So your point was spot on.
We should make a new tagline for the show. Come for Lawrence's sharp analysis and stay for the jokes. Thank you for pointing that out, Caitlin. Lawrence doesn't get enough praise for his jokes. They are very good.
The dad jokes.
No, you're absolutely right. No, please.
And they're dad jokes that my kids want to file child abuse charges against me, to be honest.
The dad jokes, yeah. No, but again, you're right that we tend to focus on things that don't really move the volume because what's going on we don't really know. And what's going on in China in particular, I am watching the deflationary trends in China and how those are going to interact with the inflationary trends in the rest of the world. Fascinating, because we're seeing a big move with a 10-year yield in the US well above 4%. That starts to get uncomfortable. You start to see tech stocks trade off, and you certainly see crypto move with tech stocks, and we've had a big correction in the 10-year. So we're in a volatile time, and here comes volatility. That's not bad, but I'll just underscore what I've said many times before. Personally, I think price is the least interesting aspect of Bitcoin and these technologies generally. To me, they're technologies, and during these crypto winters, this is when a lot of building gets done, and that's exactly what Custodia has been doing.
So, what's your take on Prime Trust here? I mean, they're a little, they're in your part of the world, the American West, and they seem to have had issues. What does that mean for custodians in the United States? And what does it mean for how you approach regulators when they look at this and go, are you another Prime Trust?
Yeah, the biggest impact of Prime Trust, I think, is something that not many folks are talking about, which is the chilling effect of state regulators watching what happened there, because it's now come out that they lost access to a wallet for ETH at the end of 2021. And did a capital raise to try to backfill. Again, it's usually the cover up, not the crime, so to speak. Not clear whether they disclosed to investors that was the use of proceeds, was to backfill that hole. But the company wasn't shut down by the regulators for almost 2 years. And eventually it will all come out what happened there. But it seems like there was some bad news withheld from the regulators. Now, I think what's so interesting is that New York, with the PayPal stablecoin approval, and Wyoming with Custodia launching and another Speedy going to be launching soon, you see two states that have real regulatory regimes. For example, in Wyoming, the digital asset custodians that are Speedy banks must not only be able to handle a surprise audit to prove the balances of the assets under control, but also control of every single wallet at any given time. So what happened to Prime Trust, literally the Wyoming regime already has it covered from a regulatory perspective. So long story short, you've got both New York and Wyoming ready to roll and moving forward. But I think in other states that don't have those regulatory regimes, you're going to see a chilling effect.
You started Custodia in 2020. Yeah. Now the launch is finally here. Given the regulatory climate, what does this next step mean to you? And what battles do you anticipate facing as you move forward?
Well, the great thing is that the U.S. states can move forward, as I was alluding. Both New York and Wyoming are moving forward. We learned through the grapevine that the Fed did object to PayPal issuing its stablecoin, but New York approved it. And as you saw, PayPal and Paxos announced it. Congratulations to them. They're off to the races. So same thing with Custodia. We're off to the races with US dollars and money market fund services, and imminently Bitcoin custody as soon as we get the final regulatory approval. And we're not, to be clear, launched in all states, not licensed in all states yet, but we're ready for the next bull market. That's the punchline, ready to scale into that with both US dollar services, money market fund services, and then fingers crossed, Bitcoin custody soon.
Do you have a timeline on Bitcoin custody?
Not yet. The way the Wyoming regulatory structure works is when the companies are ready to do digital asset custody, they notify the regulator, and the regulator has to come in and do an exam and do a big checklist. And so we're at the mercy of the timeline of the regulators on that.
So what's going on with you and the Fed? Where does it stand right now? You've been, you guys, they're not inviting you over for lunch.
Nope.
So what's happening?
It's public information that the lawsuit is in flight. There's no communication otherwise. We're in the process of a lawsuit called Discovery. It's public information that will be in that period through mid-December, and there's a trial date scheduled for April.
So you're not being asked to come in and then they hit you with a bunch of violations and things like that?
Well, no, that already happened, and it's interesting.
I'm saying like they're not doing it again. It seems to be the favorite
fool me
MO.
once. Right. Yeah, no, literally.
We'll talk about it again.
Yeah, no, well, the history was they did back channel to us that we could apply to become a member bank. Wink, wink. And we did. And then back channeled to us that was a good move. And there was a Fed governor who then told one of Wyoming's senators that one of the Wyoming Speedy applicants had distinguished itself by applying to become a member bank. Okay, we're the only one that did that. So they were clearly talking about us. So clearly we were lured in and then rug pulled. So will that happen again? Fool me once.
I got to ask you about this recent FDIC report. It noted crypto as one of the 5 big risks to banks. It's not the only report that's come out over the last few months that have said this. What did you think of that? What do you think of these reports that come out, and do they affect in any way how you plan for the future?
No, they're now laying out the risks that they should have been laying out a few years ago, and that we, especially me, I was giving speeches about the bank run risk in the bank servicing the crypto industry going back to 2020 at the Cato Monetary Conference. I gave a keynote where I warned that the banks that were serving this industry were subjected to higher bank run risk, specifically because stable coins literally could fail within the span of a few hours. And behind the scenes, I was talking to the bank regulators and in fact, actually about this risk. If you look at the OCC acting comptroller Michael Hsu, he gave me a credit in a footnote of a speech he gave in 2021 talking about liquidity risk. So he was the first of the big federal regulators who was onto this issue, but they didn't do enough ahead of time to require the banks that were engaging in serving the digital asset industry to require them to sit on a lot more liquidity so that in the event of a run, they could stay liquid and solvent. And we saw, unfortunately, that they did not. So the FDIC is right to call out these risks. And frankly, that's, again, why the Wyoming Speedy Banks are structured the way we are. we acknowledge these liabilities could move in the span of minutes. And therefore, you cannot do the traditional borrow short-term and invest long-term business model that banks do. And that's part of the reason that Silvergate and Signature didn't make it. They were trying to engage in that so-called maturity transformation business with the hottest of hot money liabilities that could all be withdrawn in the span of minutes. And so if the way to make a solvent bank and a safe and sound bank with that clientele is for the bank to invest 100% in cash and cash equivalents, short-term U.S. Treasuries, cash on deposit at the Fed, cash at other banks, those kinds of things. And that's how the banks can survive a bank run like that. That's exactly what the Wyoming Speedy Banks are structured to do.
So you called FedNow very un-American. Are you suggesting Powell hates God, mom, and apple pie? Or are you saying it outright?
I didn't call FedNow un-American. I called the fact that the Fed allowed a European fintech to be among its first group of participants un-American. Yes, I did call it that because a number of U.S. fintechs, competitors to that European company called Adyen, would love to have been part of that first group of competitors. But because of the way that FedNow is structured, it basically a fintech in Europe can go, which is what Adyen was. They went and got a bank charter and backdoored into a Fed master account. So there was a way for a European fintech to beat the American fintechs to the punch, and that is not right.
I saw Oppenheimer. That next thing you know, they're going to start detonating atomic bombs.
Oh man, Europe,
those sneaky Europeans.
Every time I go to Europe, I just, you understand the history. They just unfortunately end up in wars with each other every 100 years or so. And yeah,
100.
Yeah, less than that in some cases.
A lot tighter than that.
Yeah, I know. But yeah, the point is there are a lot of legitimate, eligible applicants who are being kept out by the Fed unlawfully, while you've got a European fintech that, because it's easier for a European fintech to get a bank charter than it is for American fintechs to get bank charters here, they were able to get a bank charter and backdoor into a Fed master account. I'm not challenging their eligibility. They're eligible. The point is that the Fed set up a system that essentially creates an incentive for American companies to go offshore. Boy, in the crypto industry, we have been feeling that, but it's wrong. And somebody needs to stand up and say it.
Caitlin, thank you very much for joining the show this morning. It's always a pleasure having you on.
Yeah, my pleasure. Good to see you. Sorry for the technical glitch. Not sure what happened there. Thank you.
All good. All right. That was Custodia Bank founder and CEO Caitlin Long.